Hey everyone, hope you're doing well. It was a very interesting week for precious metals, especially gold. And let's take a look at some of the charts. So here's a 1 year daily chart of gold. And if we zoom in, we can see that on Thursday or Thursday night or Thursday, gold made a new all-time record high, breaking that previous high set on the 30th of October, breaking above that 2,800 level for the US dollar price. And you can see a nice big green candle gapped up there. Bit of a sell-off on the Friday to close, but that makes sense. I mean, you would expect after a breakout for the price to, return to the scene of the crime, maybe return to test this level here at sort of 27.50. That's textbook price action, makes sense for that to happen. And of course, gold was in this sort of consolidation. You could argue that there was a little breakout there. You see you've got the touch there, the touch there, the breakout, a little bit of consolidation, up it goes. So it's looking positive again for gold over the medium term, maybe a bit expensive in the short term. Silver, uh, very similar to gold, but it is also, so it's not at an all-time record high, but it has broken out. So you can see the high in October. Silver is still way below that. So unlike gold breaking its high from late October, silver is still down about 6.5%. In fact, that it closed down 8% from that high for the week. But you can see silver was in this downtrend. You got a touch there, you got a touch there, and then there was this sort of textbook consolidation. You can see this was a bit of a falling wedge pattern, which is a bullish pattern. Sort of positive divergence on the MACD, a little bit of that. A little mini double bottom there, you could say, with some positive divergence on the RSI. So, 4 touches there, 1, 2, 3, 4 touches, and you can see it spent a week and a half consolidating there, breaks out on two big candles, and then makes it to the previous high around 33 or say 32.80-ish. And that makes sense for it to find a bit of top there, a bit of a top there, a bit of some traders taking some short-term profits. So not uncommon for it to come back down, test this level, and then it's looking more positive for silver as well. Let's have a look at the US dollar. I've left some of my lines on this chart. Talked about this in many previous videos that since September last year, the US dollar has been in a raging uptrend. And you can see it was a rising wedge pattern with negative divergence on the momentum indicators. These are all sell signals, signs that the US dollar uptrend was losing momentum. And of course, you can see once it broke that uptrend, broke with a big red candle, a bit of consolidation at the previous high there. So the previous key level makes sense. It did break below it for a day or two and a bit of a bounce. I would still say the US dollar is looking like the uptrend has definitely lost momentum. It may grind sideways from here. It may need to, you've got this sort of key high here around the 110 level. So, maybe it's going to go for another test of that and then sort of consolidate and maybe look a bit weaker in the coming months, maybe around Easter or so. But I would say the US dollar is probably expensive in the short term. As is, well, the other thing too is to see gold breaking all-time highs as the US dollar's been going up, and over this sort of last 3 to 6 month period, well, maybe more so in the last 3 months, interest rates, so bond yields have been going up as well, which is generally a negative for gold. So for gold to be strong in this environment, that's a sign of it really is quite strong to be able to rise in the face of a rising US dollar and in the face of rising bond yields. So if we look at gold in Australian dollar terms, I mean, let's have a look at a 1 year chart. It's pretty much just, I mean, how straight is that line? To say it's not in an uptrend. If you take the low from, 15th of February last year, you can see the gold price in Australian dollars up nearly 47%. If you want to take the low from June last year, so we're only talking sort of 7 months ago, it's up nearly 30% from that low. And you can see pretty steady uptrend. You could just about draw that line there like that. You could say it's getting a little bit extended. You could say it's forming a new shorter term trend. Bit of consolidation there. Let's make it a little bit less messy, and let's come back to that chart, and we can see, let me just draw that again. You can see it was in this sort of rising sort of, I don't know if you'd call it a wedge. I mean, maybe, I guess you could say that was a wedge, which should have been a bearish signal because you can see there was negative divergence on the momentum indicators as the price was making highs. And the price has just been so strong that it's actually just busted through that. You can see, touch there, touch there, touch there, breaks out, consolidates for a little bit, and then up she goes. So, the Aussie dollar has been very weak. I don't think the global markets have any faith in the Reserve Bank of Australia. They're going to be cutting interest, or there's a 95% probability that they're going to cut interest rates this month. They have not solved the inflation problem. They have a real estate hyper bubble to prop up. They shouldn't be doing that, but they will do that. They'll serve the interests of the banks. And also, Australia is in a per capita recession. Measured per person, Australia's been in an almost 2-year recession. We've had no real wage growth. The economy is not so great beneath the surface. We come across the silver priced in Australian dollars, and if we look at a all-time chart, we can see that silver, now it did hit a high in October, which was a little bit higher than it is now, but you can see it closed, this is monthly candles, it closed at an all-time record high for a monthly close, and you can see that was the high from 2011. So it had a go in about 7-8 months ago. You can see it broke above, and then it did a bit of consolidating. Onward and upward it goes. So that's pretty positive. And silver's had a great move. I mean, if you bought it in the lows of September 2022, in Australian dollar terms, up 91%. So it's having a very good run. Again, these are signs that the inflation problem is not solved, that there are problems in the banking system, that central banks are not doing the right thing. And these metals are rising as interest rates are rising. So generally, higher interest rates puts downward pressure on precious metal prices. Let's have a look at gold price in euros, the other major currency of the world. That's a monthly chart. You can see it's gone way up, but let's be a little bit fair. Let's go to a yearly chart, and you can see over the last year, I mean, that was the low from 15th of February, gold priced in euros up 45%. So very strong performance, hitting another all-time record high on Friday night. Very similar to the Australian dollar, breaking out from this sort of rising, almost rising wedge pattern that should have been bearish. I mean, you got a high there, more highs there, negative divergence on the MACD, and the trend is just too strong. It's broken above. So look, it is expensive in the short term, but this indicates, how much strength there is. There's a lot of strength in gold. Let's have a look at it in Japanese yen. I think the third, if you're measuring US dollar index, I think the euro makes up most of it. Yen is a big part of it as well. The Japanese yen is a big funding currency for the rest of the world. The Japanese, from 1999 until very recently, basically kept interest rates at zero. So lots of big money borrows in Japanese yen at near 0% rates and puts it elsewhere in the world at 4 or 5%. That's the carry trade, a topic for another video. But you can see again in yen, gold was in this sort of consolidation, broke out. Same story here again, making highs. And if we go 5 years, I mean, have a look at how much gold is up in Japanese yen terms from the low, the COVID crash lows in March 2020, gold price in Japanese yen up 163%, and right on the highs. Pretty steady trend, not too many big sell-offs there. One thing that has come alive in the last few days is platinum. If we have a look at a chart of platinum, you can see that was the high from May 2024. We're on a daily chart now. And if we draw a line across there, you can see platinum is trying to break its downtrend. Now, as I've shown in previous videos, I think previous key price levels, so this high here is more important than an angled trend line, and I would say this key high here, you can see we're there again. So in the short term, platinum looking a little bit expensive, but you can see from the low, so it started the year at 910 and it's up nearly 14.5%. So it's having a great run. Couple of big green candles, again a sign that maybe the inflation problem's not solved, maybe there's some demand coming back to these metals. And palladium as well, looking on a daily chart, again, looks to have broken its downtrend. You can see the price was making lower lows there. The momentum indicators, MACD, making higher lows. So this is positive divergence, generally a sign that the downtrend is losing momentum. You can see there's a lot of support around this level, around the $900 level. So hitting key previous levels, and with positive divergence, you could say, I don't like to draw angled trend lines too much, but we could draw a wedge there and say that it was in a bit of a falling wedge pattern. If you want, you could draw it there as well. See, I don't like that, because then where do you draw it? But I would say that level's key, because you can see touch there, consolidation there, breakout, return to the scene of the crime. So return to test the breakout, and then 2 big green candles. So precious metals, including platinum and palladium, if you put them in that category, they're looking very strong in the short term. Platinum and palladium, very hard to judge. For my clients and I've reduced our gold and silver allocation to roughly 10-12% from a maximum of 20%, just taking profits at these levels. Again, I don't know if that's appropriate for you. But just in the short term, as you're hitting all-time record high prices in gold, it makes sense to take a little bit off the table. There are other asset classes that are at a discount, especially the miners. In fact, we could probably just have a quick look. This is the US listed GDX. You can see, even though gold has made a new high, breaking the October high, the miners are still down nearly 12% from the high. So there's no love for the miners. The market doesn't like the miners, but they were a buy to start the year. You can see there was a fresh low, positive divergence on the momentum indicators, indicating that it was a buy. So it was a good time to buy there. I mean, even if you just bought the previous low, you'd be up. But if you managed to get it right down there, and you'd look back and go, okay, well, there's some pretty key support there. Lots of activity around that sort of $33 level. You can see that consolidation there, level there, almost touched it there again. So that was a level that made sense to buy. And of course, that's the 31st of December. Let's take the 30th of December. You can see there was a 17% rally, still up 16.5% from the lows. So there was a good trade there. It makes sense for it to be stalling a little bit here. You can see there's a high there, similar level there. You can see that level's pretty key around the $39, $40 level. Lots of activity there. So, it makes sense that would be a level that it would stall at and that you would look to take a bit of profit if that's appropriate for you. But with the price of gold looking very strong over the medium and long term, you would have to think at some point the miners are going to catch up. So thank you for taking the time to listen. I hope there was some valuable information in this video. Talk soon.